done well this year is Bharat Electronics, and it is the next company on our radar as well. The company saw a good Q1 with revenue pretty much in line with what was expected. The margin also came in better than what was expected at almost 19%. Another positive from this quarter's earnings is that we have seen order wins come in very high at around 8,100 crore rupees. And earlier, Vivek caught up with Bhanu Prakash Srivastava, who's chairman and managing director at Bharat Electronics, to really understand more about the numbers and their outlook from here on. Listen in.
We are having a robust performance we had in the last financial year, and we are a well-structured plan for what we are going in this financial year, that is 23-24, and we are going exactly as per plan. If you see in this quarter, we have supplied weapon locating radar to Indian Army. That was a significant value, and apart from that, EVMs we have supplied, EVMs, VVPATs to Election Commission, and many other projects. So our performance has been as per plan, what we envisaged.
So in the quarter gone by, you've recorded close to 8,000 crores of order inflows. Now guidance for FY24 is at close to 20,000 crore, indicating you've done almost 35 to 40% of the guided inflows. So at this point of time, we want to understand whether there are upside risks to the order inflow guidance that you have given, and also would there be upside risk to the 17% revenue guidance that you've given?
See, what guidance we give both for revenue as well as order acquisition is based on the long-term process what we see in the government of India or with our customers. So when we gave the 20,000 crore plus order acquisition guidance for 23-24, it's based on the pipeline of the orders which are likely to come. Now, it so happened in this case that significant portion of the orders, they were in advanced stage, and that's how we were able to get the order worth around 8,000 crore plus in Q1. But that doesn't mean that it will continue in all the quarters, because it's a long-run process for acquisition of the orders from defense forces. So we stick to what is the guidance we have given, because it's not every quarter the exact number of orders we are getting. Like last year, you remember that most of the orders we got in Q4, and that was these orders were in pipeline, and some of them we got in Q1, significant 35%. But the many orders which we are envisaging, they are at various stages, and the new orders which are likely to start, which will go beyond 20,000 crore plus, they are likely to be materializing in 24-25. So we stick to our guidance of 20,000 crore plus order acquisition in this financial year. Similarly, if we look into revenue recognition also, what we plan in all 4 quarters is based on what we can deliver depending upon the customer requirements, order available, platforms availability and all. So every quarter we have planned, and what we are right on the track on revenue recognition also. So we will be around 17%, which amounts to crossing a mark of 20,000 crore plus revenue in this financial year.
Well, sir, thank you so much. You've explained, the slightly lumpy nature of both order inflows as well as, revenue recognition trends. But FY24, talk to us about which are the key orders that are in the pipeline. And it's also pre-election year. You've spoken about, receiving some orders as far as EVMs are concerned. One big order activity that market is keenly anticipating is the surface-to-air missile. So where do we stand as far as that particular segment is concerned?
See, election years, whatever EVMs are required, we already had the order last year, and we are executing, and maybe by September we will be closing the requirement of EVMs, what we got the order from Election Commission. So that will be sufficient for 24 elections. So we are not expecting any further orders of EVM in this financial year. As far as surface-to-air missile system, what you are referring, I understand, is QRSAM, where that trials have been completed, and now services, they have started the process. So this being a big ticket process, I don't see that materialization of order in this financial year.
Okay, so thank you for that clarification. It's an important one. So Q1 EBITDA margin stood around 19%. Do you think, when you end FY24, you'd be closer to the 21 to 23% margin guidance range that you're given? Are there some downside risks, or going forward, the execution would be done of higher margin orders?
We are very confident that we will achieve the EBITDA margin guidance whatever we have given in start of this financial year, that is between 21 to 23%. See, what we achieve in Q1, Q2, Q3 depends upon the product mix. We have a very large variation or the complex number of equipments varying that profitability. So Q1 we got 19%. It's on expected what you say that line, and we will be able to achieve what we projected by end of this financial year. I'm very confident on that.
So, that takes us to our last question. Quite a bit of clarity coming in terms of revenues, order inflows and margins. So we now want to talk about capex. What is the capex you've planned for FY24?
As far as capex is concerned, this year we are expecting expenditure of around 800 crores, which will be better than what we spent last year. Capex, what we are spending is in two forms. One is that we are building few factories, one coming in Nimaluru in Andhra Pradesh, that is electro-optics factory. Then one is coming in Palasamudram, then Nagpur, Ibrahimpatnam. So capex major amount will be spent on building these factories, and significant half will be spent on upgrading the existing facilities in various units of BEL.
Okay, with that, it's a wrap on Trading Hour. Thank you very much for watching. Halftime Report is up next.